The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN, your number one source for technical analysis for trading and investing. Welcome to the April 21st marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, a daily newsletter service that is the intelligence for creating your financial freedom. Hope everyone out there had a fantastic weekend. I know I did, and it's great to be back with you. One of the articles I read over the weekend, it was a bit sobering. Check this out. A recent survey conducted by Harris Interactive found that 57% of respondents were afraid of death. That are afraid to invest in the stock market. That's right, folks. More people are afraid of the stock market than they are of dying. And 83% of the entire group that responded, they believe that there's going to be another financial crisis. Now, statistically speaking, and with enough time, I'd say it's more like 100%. But here's the thing. The Harris survey also found, this is what really caught my attention, the Harris survey also found that 2/3 of Americans fail to use a financial advisor. Now, as most of you know, my outcome each day is to, help you to become a better money master. It's to provide you with tools that each of us need in order to lead an inspired life. And really, for the last quarter of a century plus, what I've done is I've studied and I've used the secrets that millionaires and billionaires, captains of industry, the most successful athletes, that all of these folks on the planet use. And I can tell you that each and every one of these successful individuals, folks, they use advisors, they use coaches for every area of their life that they want to master. So I was so amazed, really, of all the statistics that I read in this article. The mere fact that 2/3, 67% of the folks, do not use advisors. So, as you know, questions control our focus. So let me begin this morning with a question, and it's this: If I could speak to those folks out there, if they could find a way to thrive in any economic time, if they could find a way to achieve and live a life of meaning, don't you think they'd want to know the answer to that? Here's the deal. Each of us work hard for our money. And the key to wealth is to make our money work harder for us than we do for it. That is the absolute key. Most folks think that investing in coaches or advisors, there's always two ways to do things. You can either do it yourself, learn from experience out there, or you can hire folks that actually have done it before. And most folks, they think that investing in coaches or advisors or newsletters is costly. Let's just use as an example my newsletter service, Mastering Probability, because I know all the details about it. And some folks would say, hey, that costs $149 a month. That's, of course, assuming you don't use Tiger dollars, which we've got a special promotion running here, but that's neither here nor there. And that's assuming you don't buy a full year subscription. But in reality, what the real cost of my newsletter service, just as an idea here, just to kind of put things in perspective, because it's always important to make sure that we're looking at things in perspective. The real cost of my newsletter service, and just as an example, somewhere between $3 and $5 a day. It really depends on which buying option you choose, whether you use Tiger dollars and so forth. That's right, $3 a day. Less than the cost of a gallon of gas, less than what you threw out for dinner last night, or maybe what you certainly spent on, how about it's less than the cost of most things out there. Yet it's the one thing, I can tell you this with certainty, it is the absolute one thing that all millionaires and billionaires have in common. They use advisors. They use coaches out there. And it's the one key that I wanted, as I read that article, it's the one key that I wanted to get across. Maybe you already know this, but I think it's just so important to really take a look at it and understand. And I'm not saying you need to use my service. I'm saying use a service. Use an advisor out there. Find someone that's trusted. Find someone that's credible. Find someone that you believe is an expert that produces quantifiable results. Again, just using my service as an example. December 18th, many of you out there, because I know there were many that were at the workshop, many of you attended the workshop where I unveiled the Rhodes Momentum Indicator strategy that, that we've been trading in my newsletter service. Certainly since December 18th, we really started trading it back on August the 8th last year. For every $100,000 invested, that way you can go ahead, you can divide it by 10 if you've got $10,000, or you can multiply it. But, for every $100,000, if you had taken my advice, it would have provided you, just since December 18th, $88.50 a day versus the cost of $3 or maybe $5, depending on which option, you would have chose. So on a $100,000 account, my service cost $89, and it would have cost you $3. Folks, you want to go out there, you want to find somebody that you can trust, that's credible, that produces quantifiable results out there. You want to do that. It's just this game that we play each day. We're going to get in and we're going to start taking a look at the game out there. This is nothing more than a math exercise. Look, we use Fibonacci numbers. It's a math exercise. Math exercises, that's what I'm an expert at. I mean, when I say that I'm an expert, well, we'll go into that. The math... Last week, as an example, I spoke on Thursday when we left you. I talked about a win-win proposition, and how the importance of a win-win proposition out there is you've got to have a reciprocal relationship, and this is important. This is important for you and all the relationships that you have. There needs to be some form of reciprocity out there. That's why each of us need to develop that ability to share. Just as each of the contributors here at TFNN do each day, I know that the absolute best investment of my time is sharing my thoughts and my ideas with you. Because you get to hear it once, I get to hear it over and over and over again. It just continues to cement in my mind the belief system that I have. I believe the way you do anything is absolutely the way you do everything. And I believe that our capacity, yours and mine, our ability to grow is unlimited. It's unlimited and it's continuous. And when it comes to trading these markets, there's nothing more than it's really nothing more than a math exercise. And like I just said a minute ago, I'm really good at math. That's why I was a licensed practicing CPA by the age of 21. It's why I know that more risk, listen to this, okay? This is key here. I know that more risk does not mean increased reward. If any of you believe that more risk means increased reward, more risk means one thing and one thing alone. It means more risk. It's why you absolutely need to understand that power of 1%, the power of proper position sizing. If these are terms that are new to you, or maybe they're not new to you, but you don't use them, folks. And if they're new to you, or if you want a refresher course, I've got a 90-minute workshop that teaches you all about the money management aspect. It comes with my newsletter service out there, so, you can check that out. Again, I'm saying, folks, if you happen to be one of that 67% out there that do not use coaches and advisors for areas of your life that you want to master, please go do it. It doesn't need to be me, but just make sure that you do it. Go through the math exercise, and what you'll find out is it will go ahead and it will take you to the level of financial freedom that you are searching for out there. So look, it is Marvelous Monday. Let's go check out the message of the markets out here. Right now, we've got Dow futures. They're trading up 15 points. They're trading out at 16,358. S&P futures up 1.5. They're trading out at 1859.50. NASDAQ futures up 10. They're trading at 35.33. We've got Goldilocks back $3 right now. She's trading out at 12.90. Silver down 17 cents, trading out at 19.42. Light sweet crude off 16 cents out there, trading out at 104.14 over in Asia last night. I think it was a mixed. Oh, I didn't mean to do that on my chart. How the heck did I do that? Just grabbed the wrong tool. It's one that you can't see on my screen right now. Over in Asia last night, a little bit of a mixed bag. The Nikkei was flat, ended up being down about $4 out here. Hang Seng up 64 points. Were they open last night? Almost seems like the numbers from last week on Thursday. Anyway, let's go check out our markets out here. Yeah, I know the Nikkei was up. It just simply closed flat last night. Or open, I should say. So where do we begin our day? Let's begin our day. Let's take a look at, when we take a look at one of my functions here is really telling you the story about the markets. And yes, I do mean story, because when we take a look at reading a chart, and that's what we do here, that's what I'm doing from a technical analysis standpoint, it's about being able to read the message of the markets, being able to read the story. Now, I'll take a look at today a number of different time frames. When we take a look at a monthly chart, it's like reading the book War and Peace out there. Maybe some of you have read it. It's like reading Atlas Shrugged. It's like the big, thick books out there. That's what a monthly chart is. That's reading there's a lot of chapters inside there. And some of those chapters, that means taking a look at a weekly chart, or taking a look at a daily chart out there. They're nothing more than chapters. Remember, make sure that you always stay focused with regard to what's going on in your time frame out there. If you want real short stories out there, well, that's when we take a look at 120-minute charts. That's when we take a look at the 30-minute charts out here. If we start off with a 120-minute chart, then we'll switch over, take a look at a daily, go take a look at a weekly out there, take a look at a monthly. 120-minute chart here is probably the key chart for the day out here. Maybe it's for the week, and that is the NASDAQ. NASDAQ has led the markets down, so they're still the leader when it comes to leading the markets to the downside. What I've got drawn on my chart out here, it's the descending price channel. It's a descending price channel that began up at the highs out here. Now, not at the high that occurred here at 10 o'clock in the morning on March the 6th, but the high out here that actually happens to be the top of the bar. Now, so from a trend line standpoint, but I'm just identifying the price channel where price has been traveling in. But in essence, you could use the open or the high, I should say, from 10 o'clock in the morning on March the 21st out to about 37.1275. Then I'm just connecting the dots. I'm just connecting to the body of price, because the body of a candle, body of price, the body of a candle, because the body of the candle truly is the essence of price out there. That's the difference between a trend line. A trend line is using the upper or lower portion of the candle, or whatever could be a bar chart, whatever it is you might use there. And those are nothing more than the extreme emotions during that trading session, whatever that time frame chart is that you're looking at out there. But real price is either the open or the close of the body of the candle out there. And that's what we can see here. Right now, price has bumped up its head. In fact, Thursday at about 2 o'clock in the afternoon, price inside the NASDAQ futures got up to a high of 35.4250. Price just stopped there. Now, as price was doing that, it was making the fourth wave of Basil Chapman's Chapman wave out there, and was also running right into the top of that descending price channel. Price went ahead and reversed for a bit. There was a little bit of profit taking. Of course, if we take a look at Thursday's action, it didn't appear to me that the bulls were really that afraid of carrying their position over a long holiday weekend out there. That was a message. Don't you think that's a psychological message that was being sent out in the market? Well, look, psychological message or not right now, the key for us to be watching is going to be what happens here as price deals with this descending price channel. Even in this little 30-minute session, I'm sorry, we're in a 120-minute session right now that I'm looking at my chart. Even in this 120-minute session here that closes out at 10 o'clock, price ran right into the top of that. So this is what we want to be watching today. If we can see a break above this level with conviction, that's just going to continue to cement that the bulls were right, that they weren't worried about carrying those positions over the weekend, and that we're going to see higher prices. At least higher prices today, maybe tomorrow, maybe the next day as well. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go check out the world inside the silver and gold complex out here. Let's begin our second segment by taking a look at that. Now, if you're watching this on Tiger TV, I hope you are. I'm going to blow this stock chart up on my screen here. If you're listening on your radio, your mobile device at tfnn.mobi, thanks so much for doing that. I'm going to describe to you what we're looking at. Of course, you can catch the archive of this show on Channel 9 out here. We're looking at the daily chart. We're looking at the continuous contract, by the way, for silver out here. And the continuous contract for silver, the current contract, the May contract, would show the same pattern out here as well. And that is the 0.786 Gartley buy pattern. That Gartley buy pattern, I know I can get it out here. That Gartley buy pattern confirmed itself on the trading session of March. It actually formed on March 27th. You got a confirmation of that pattern on March the 28th out there. Even though the March 29th candle, in essence, was not your second opinion, your second confirmation out here. What price actually did, though, it actually made one of the first objectives of any type of a Gartley pattern by making the 0.382 retracement, at least of the C to D leg, on the way down as price got up to a high on April the 10th of $20.40. For me, that's a qualifying Gartley pattern. And the importance of that, in this case here, a qualifying Gartley buy pattern, the importance of that, as you've heard me say many times, when these patterns fail, meaning a 0.786 Gartley. When it fails, it oftentimes turns into a what? Turns into a butterfly pattern out here. That's not the case with a 0.618 Gartley pattern. That actually works. That will just, when it fails, you got to take a look at the 0.786 retracement if it's going to go down to the next floor. Well, one way to take a look at this is that say, hey, maybe price just needs to go down to the next floor. Well, the next floor, that's pretty easy. That's going to be your 100% move of a move. That's going to be your swing point from December 31st. And in fact, that may be what it's doing. But we need to keep in context here two different things. Number one, the last leg, this C to D leg, this is where we're starting off with price here on March the 14th out of $21.79. That would be your A point of an A to B equals CD to the downside. Here your B point would be where that 0.786 Gartley pattern formed. That was on March 27th. That's out at 1957, makes a 0.382 retracement. The worst kind of retracement that you can have from a momentum move to the, in this case here, to the downside, okay, worst to the downside, best to the upside. Well, of course, it depends on whether you're long or short, right? So, but the most damaging one is when it only makes a 0.382 retracement. Now I'm talking about to the downside here, and then begins its move down, which in fact silver did with conviction. It did it with conviction on that trading session here from April the 15th out there. So it's been moving down with volume. It's now below the swing point. Yes, it's got to take out the swing point low here from December 31st, 1872. But if it does, just the A to B equals CD pattern alone, I got to scrunch the chart here, says at least $18.17. It says, hey, it's even a possibility if silver really picks up and gets going right around 1758. Well, in between that level, 1758 and 1818, guess what we have? That's where you have that butterfly form, the actual price of the 1.272 butterfly pattern. And by an expansion, now I'm coming back to my, what we'll call the X point, where X marks the spot, where that Gartley pattern began. That happens to be the December 31st low. If you go from that low to the high that formed out here on February 24th, you're looking at the expansion of those swing points. That's what creates your butterfly. That says you can see a spike down into the 1779-ish area as one possibility for this pattern. What is it that we know right now? What we know is that silver is trading inside the December 31st swing point. It's likely going to go test the lows out there at 1872. I would suggest, based on the pattern that we're looking at, it actually wants to go ahead and spike lower. If you pull that back, that actually takes you back to the June 28th lows out there, and that's right around 1818. So pretty good chance we're going to see that 1818-ish range here based on the current pattern, and that's all that we're doing. You see, when I get on the show each morning, as we do it right now, I'm reading to you the story by patterns out here, by candlesticks. I'm reading you the current page in the book on the chart. It's like reading a book. It's like reading a novel out there. That's all that we can do. The key thing is, when you're reading a book, for the most part, you don't know what's going to be on the next page. You don't know what's going to be in the next paragraph out there. And that's why when you are making, that's why we use stops. That's why you use both a stop and an exit. Every trade that you place should be bracketed. The most objective time that you are when you are getting into a trade is before you've entered the market. And before that time period, you need to do all the math. The math is, where am I going to enter, and where is it that I'm going to exit? Both if I'm successful, as well as if it's a failed trade out there. 877-927-6648. We get back, we're going to go turn the next page in this markets, because they're going to open. We're going to see if these markets are going to pop, if they're going to drop, or what they're going to do. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got the Dow up 5 points, trading out at 16,417. S&P up 40 cents, trading out at 1865. Composite up 7, trading out at 4102. Russell 2000 up a point and a half, trading at 1139. Apple up 86 cents. Microsoft up 4 pennies. Leading the charge, the upside, our friend Sarepta Therapeutics, SRPT, back in the game here, up 50% this morning, up $12 and a change. This thing's been a rocket ship to the upside and to the downside out here. We'll go check in on that here momentarily. AstraZeneca, AZN, how about that? $100 billion offer out there. It is trading up 6%. $100 billion. I had to look at, I had to look at my eyes, not look at my eyes, I'd look at my phone a couple times and see if I was seeing things out there. $100 billion. A billion here, a billion there. In any event, it's up 6%. You've got CBE on. I wonder if this is an IPO. Let me see here. No, that's just simply a communications company that's being acquired out here, up 38%. Newskin, NUS, is a ticker symbol here, up 3%, up 270. Baidu, up $1.20, $1.88, up 1 2/10%. Halliburton, HAL, up 3%, $1.80 or so. Newmont Mining, up 7% out here. NEM, I think there's some consolidation news there between Newmont and what was the other mine? I saw something flip by on the stations. In any event, To the downside here, leading charges, you've got Kimberly-Clark. KMB is the ticker symbol, off 2%, down 229. Google's off $1.90. Tesla is, I'm confused as I take a look at my stock chart. Lululemon, LULU, down $1.15. Netflix off $1.04 right now. Our call number 877-927-6648. It looks like we got things now started to the upside here. Dow's up 26 points. S&P is up 26. I'm sorry, up $2.60 out here. Let me take a look here at the, let's go back to the futures contracts here on the daily charts. Let's see what we have going on. Let's take a look at the NASDAQ. Let's start by taking a look at the NQ. Let's see what we have out here. And then we'll go ahead, during the day, or at least during the next hour, we'll certainly take a look at the resistance level in that descending price channel on the 120-minute chart. Now, the daily chart has its own descending price channel, and if the Nasdaq futures can break the 120-minute chart, then the likely target zone becomes the daily descending price channel out here. That becomes the next resistance zone, which is probably going to get to a price, which would probably get to a price level somewhere right around the April 10th high, right around 35.99 out there. That would become your level of horizontal resistance. That big old wide ranging bar to the downside, right around the 35.99 area. It may be a little bit lower than that. But first things first, the NASDAQ on the 120-minute chart has to break that descending price channel. If we take a look at retracements here, right now, just how about the last leg from the high here from April 10th down to the low that was put in on April 15th? You'll see you're trading just slightly above the 0.618 retracement area, which is 35.25. It's trading at 35.30. Says 35.57 is a gain. That is the next level to the upside. If the market does break, expect price to first get up there and then right around that 35.99 level. That is on the NASDAQ, and it's important for us to be watching the weak link in the market out here. If we take a look at what's going on in the strong area, that would be both the Dow as well as the S&P futures. The Dow, more specifically, the Dow is trading inside its swing point high, its all-time swing point high on April the 4th, albeit that's a high volume bar out there. That says that it should be tested, even though we're trading inside it on light volume. So long as the Dow futures stay inside the 16,312 level, that says 16,426. You're at 16,350. That becomes another 350 for it, about 75 points or so to the upside. That should be the next level, but more likely you're looking at 16,574. That means the Dow futures getting all the way back up and testing the highs out there. If we take a look at the ES-mini, in the case of the Dow, it actually formed a nice little buy point out here with an A to B equals CD to the downside that it formed back on April the 14th out there. It did a 1-to-1 A to B equals CD to the downside. If we take a look at the S&P futures, the S&P futures still above this big, large 112-point consolidation pattern that is out here. We've seen it break above, come back and test it, break above, come back and test it, go ahead and complete an A to B equals C to the downside. That was a Gartley buy. That is actually on a daily chart, a confirmed Gartley buy pattern that had formed out here on the trading session of April the 14th out there. And you had this little piercing candle that had formed here on April 14th. It got followed through on April the 15th. And so now what we're taking a look at, like any Gartley pattern, as you know, there is always 5 outcomes. One of those outcomes is 0.382 retracement. Well, that was hit on April the 15th, plus some. Now we've seen it gone to the second objective. That's a 0.618 retracement. 1858.50. You're trading at 1859.25 right now. Very likely that, and you're also, in the case of the S&P futures, it's trading also inside its swing point from April the 4th out there. That says, what should it do? It should likely go test the high. Of course, that would be the fourth outcome by getting back to the 1892 level. The next stop up, though, on the way up, is going to be 1873.40. That's your 0.786 retracement area, and that's what I would expect that we would see the ES Mini. Now, if the ES Mini actually takes out the highs from April the 4th, this is going to be one thing at a time. Certainly not going to do, well, I can't tell you when it is, if it is, but if it does take that level out, then that becomes the fourth outcome that you look at. Now, the fourth outcome here, remember, we've got a measured move that says 1957 is the potential high out here. And if we take a look at just simply the A to B equals CD pattern, because the ultimate outcome of any Gertley is that the actual buy point or sell point becomes the new C point of an A to B equals CD, the upside or downside. Well, if we take a look at this to the upside here, the 1-to-1 A to B equals CD would take it at 1963. Kind of interesting, isn't it? You have a consolidation pattern. That's the yellow pattern that you're looking at. I think it's kind of interesting because now you've got really, in essence, two potential confirmed patterns to the upside out here. Yes, I'm talking about to the upside out here. I'm just reading the message of the markets, the way that it's presenting itself to us. It was an absolute Gertley buy pattern that formed back here on April the 11th. If you are someone that trades Gertleys, you're looking at trading Gertleys and you're ignoring that as a Gertley buy pattern, I have to ask the question, why? What is it about that pattern that somehow you would say is not a Gertley? Because it is. It's complete. It's got everything that it needed to form out there. So you've got a 112-point consolidation pattern that, in essence, has been in place since the end of October 2013. Been moving sideways, tried to bust out of it. Actually had some conviction on the breakout session when it did bust out of it, and that was back in March the 4th out there. It had volume and everything as it took out its previous highs. So it came back and tested it like it should. Now it got back inside there, but when it got back inside there, instead of going all the way back down to the bottom of the consolidation, what got in the way was HM Gertley. That's right. So he got in the way. And if we take a look at the explosive nature of this coming off the C to D leg right now, take a look at that C point. And this is, from a bullish standpoint, that's really what you want to see out here in the market. This has exploded off of the C point. And what does that mean? Well, oftentimes that means you're going to do more than a 1-to-1, A to B equals C to the upside. But in this case here, we're just going to take it one step at a time, one moment at a time. And right now, the one moment at a time is the next level. That's 1873 and change. The next level after that becomes 1892. But if we do see a close above that, what this is saying, and what I think is likely actually suggesting more so than not, is that what the S&P future wants to do is get up to 1964, 1957. That would complete the measured move of that consolidation pattern. It would complete the fifth outcome of H.M. Gertley's pattern, well, at least the way that Stevie puts these patterns together, the fifth outcome of any Gertley that is out there. And we'll take things one step at a time out there. So that's what's going on inside the ES Mini. If we go take a look at some things here that are popping and dropping, Sarepta Therapeutics is one of the equities that I mentioned that is leading the charge to the upside. Let's go check that out here. As I said, this thing has been up, down, and all around, as Tom likes to say, and so that means every now and then I might just go ahead and borrow that expression. Now, what do we have out here? This is actually getting above an old resistance level as we speak today. Old resistance would become new support. In this case here in Sarepta Therapeutics, it would be the level of 3610, which it's already tested here this morning. So it gaps up, opens up at $40. $40 even, Steve, and it gets down to 36.21. 36.21. What was it doing as it got down there? Well, it was testing in essence, close to the 36.10 mark, the November 11th downdraft. Big downdraft volume on that trading session here of November the 11th. Now, remember, if we pull this back here, this thing has been a high flyer to the upside out here. It did that on October the 2nd, 2012, when it took off with, how many shares was this to the upside out here? It was not 2 million. It was 27 million shares. That was on October the 3rd, 2012 out there. And looks like this thing is taking off topside again. This now has an A to B equals CD to the upside. Let's go take a look at that. The 8-point happens to be the low that took place out here on November 13th. That's out at $12.12. The high being the February 24th level at 31.28. The C point being a retracement back into a little sign of strength. This thing had a nice sign of strength on January 16th. No question about it. 14 million shares. Did not completely fill the gap. Came back into the gap with much lighter volume. Last time it was down inside that gap was on April the 15th. 1 million shares out there. Now it's exploded. You've got big volume today to the upside. 4 million shares taking out a swing point, which was on February 24th. That had volume of 2.8 million shares. So long as it holds today the price of 36.10 and doesn't get below that, and you can see it's already done the 1-to-1 A to B equals CD. Looks like these highs inside of Sarepta Therapeutics will be tested again. That ought to take it back into the 55.61 to 52.28 type range out there. SRPT is the ticker symbol out there To the downside, leading the charge to the downside, we got Chipotle. Now, Chipotle on Thursday, they were out with earnings. Let's go take a look at that stock chart. They had gapped up big time and then sold off throughout the day out here. Maybe they didn't gap up. Let me see here. Did they gap up? No, I guess not. Let me refresh my chart out here. I thought that they had gapped up. What was I thinking? That's not what the stock chart said. In any event, on Thursday, April 17th, yes. They opened up at the at 552.40. That was the high of the day. Continued to sell off on the mere fact that they were going to guess. They say they sold off because they were raising prices. I think people at Chipotle, they're going to go to Chipotle whether they got to pay another quarter or 50 cents or what have you anyway. But what's always been amazing to me is that the fast foodish restaurant, is a stock that is, it's amazing to me, just amazing. Price at $622. To me, that was more amazing than the mere fact that they are going to raise their prices out here. In any event, this is trading lower. Looks like this is going to now head back to, well, at a minimum, the last sign of strength out here, which took place back on January 30th. And that was out at somewhere between 485 to 499. Volume on that move up was with 2.1 million shares. Today already down with 216,000 shares. Not exactly the way you want to see things coming back and closing the gap. That says that Chipotle's next move, if it can take out these lows, ought to take it back into October 17th of 2013, somewhere around the 438 to 442 type range out there. That had a sign of strength with 2.4 million shares out here, but clearly some institutional selling in Chipotle. Maybe they were also saying, hey, I can't believe this thing has gotten this high, up in that $500, $600 range out there. And in any event, we'll see what happens inside of Chipotle. Of course, I doubt that we will see this big, huge island reversal where you would have a gap down below 477.34, but it does look like that 477.34 to the area of 438 or so should be tested here in the upcoming future. Let's take a look at, let's see, Charter Communications. Are they part of the buyout here? No, they're in talks for a buyout. AstraZeneca, we don't want that. CBN. Let's take a look at Halliburton. Halliburton to the upside. Let's go see what's going on inside that stock chart. HAL is the ticker symbol. It's trading out right now at $63.52. Let's start with a clean chart. This is easiest way. So there we go. We'll delete everything out here. Halliburton at all-time highs is what it looks like. Let me put this on a monthly chart out here. Yeah, Halliburton is at all-time highs, and its all-time high looks like this was back here on the trading session of July 31st. This is a monthly chart we're looking at. That ought to be pretty decent resistance. We can draw the resistance line across the top of the chart out here. How do we know it's resistance or used to be resistance? Well, old resistance becomes new support. If you take a look at the trading session back on July of 2008, July 31st, 2008 out there, big old bearish engulfing candle, at least at that stage as it was making its all-time highs. That was $55.38. Look, you want to learn how to read the message of the markets. You want to do it correctly, too. Very important to do it correctly with regard to these candlesticks. Guess what? Had another big old bearish engulfing candle in August of 2011, right at about the same area as that bearish engulfing candle from July of 2008. 55.38 ought to be the support level for Halliburton. When we get back, we'll go see where this thing may be headed to. Looks like to the moon. 877-927-6648. Dow's up 32. S&P is up 3. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 34 points. S&P is up 3. Before we went to break, we were taking a look at Halliburton. Now, the chart that I've got on my screen here right now, this is part of the Rhodes Momentum Indicator strategy out here. Halliburton gave a nice little buy signal on January 30th, 2014 out here. Gave a confirmation of that signal on February 6th. That's when it closed out right around the $50-ish level out here. On the daily chart, as we take a look at it, did have a price relative strength divergence. This is how strong that was actually formed on the trading session of April the 4th, April the 5th, or April 7th, I should say. It gave some confirmation to the downside out here of that pattern. That has since been reversed. It was reversed here on Thursday as price moved a bit higher today. That pattern no longer exists as it's right now priced out at $63.18. So where is Halliburton on its way to? We take a look at today, volume so far is 3 million shares out here, taking out its last swing point at 8.6 million shares, so no problem out there. Now, the small A to B equals CD. Let's just take a look at the small pattern out here. That would come off of our swing point low from January 13th out at 54.57 to the high on April the 4th out at 60.52. Pull back down into, looks like probably about 0.382 retracement or so on April the 11th. You can see it's gapped up into the 1-to-1 A to B equals CD to the upside. Looks like 66.74, 64.66 becomes your 1-to-1.272 area, but it looks to me more like the 67-ish area is where price wants to head to on its next move out here. If I take a look at expansions of swing points, we take a look at from the high from November 15th of 2013 down to the low that was put in here on January the 30th, and that was out at 48.46. Well, shoot, that's already well above the 1.618 level. So the 65 to 66 area, again, looks like where Halliburton wants to at least move to. If we take a look at, so with about, 2 minutes to go here in today's first hour, you've got the Dow is up 34, the S&P is up 4. Let's do a quick recap. Let's go take a look at the chart that we began our session looking at, and that was the descending price channel here. Inside the 2-hour chart on the NASDAQ, it has not pierced that. It's tested it. It has rejected that until this. We see a clear break of this area. The breakout has to be a little bit in question out here because the NASDAQ, the market's not going to move a ton higher without the NASDAQ, without the, no real breakout, no real breakout. As we take a look at the ES Mini and its potential price projection to the upside, it's not going to happen without the NASDAQ and the Russell 2000 participating. Right now, the NASDAQ is saying, hey, not so fast out there. Of course, if we take a look at the VIX index, it's still right now trading, even though it's up a little bit today, it is trading below the 50-day exponential moving average. That 50-day happens to be priced at 1470. This is trading at 1366. That is bullish as long as the VIX index is trading below the 50-day. One of two outcomes, either a market that moves sideways or up. Either one of those is a good situation for the bulls, not such a good situation for the bears out there. And if we take a look at the New York Stock Exchange, the wider swath of the market, what you would need today would be 547 or more net declining issues. Right now you've got 500 net advancing issues. And as we know, as we took a look at last week, the New York Stock Exchange, as it came back to test its most recent swing point lows and it couldn't bust out those lows, it formed your hammer candle out there. That was on the trading session of April 15th, and then it gapped up the very next day. Those are two very bullish signs. Folks, thanks so much for joining me. It is Marvelous Monday. Hey, do yourself a favor. Go check out my newsletter service, Mastering Probability. There was a question. What's it been producing per day since we started trading on August 8th? $95 a day versus a cost of about $3. Take care, folks. Have a great Monday. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.